Nice. What number?
134.
134. How about that, Jared? You know, when we get to like 500, Jared's going to be like, what in the hell? It'll happen.
Yeah.
We'll
all
party
probably,
here at the office.
as long as they're serving drinks.
Yeah. Can I have another?
Welcome to the Rebel's Edge, folks. I am Jon Najarian. Pete Najarian and Jared are all part of the team that brings you this wonderful broadcast 4 days a week, Monday, Tuesday, Wednesday, and Thursday, 1 p.m. Eastern Time. Shall we dive in, Pete?
Let's do it. Let's knock it out. We got a lot to cover here.
All right. By the way, I'm going to be joining Liz Clayman at 3 p.m., just less than 2 hours from right now, up the street over at Fox News. That should be fun. Let's talk about macro, Pete, and let's give it all the time it deserves, which is 1 minute. Today, it's really about what's going on with stocks responding to Friday's jobs report and whether or not we're going to see higher interest rates. To me, the answer is yes, we're going to see higher interest rates, but the answer as far as what the bond market thinks is no, we're not going to see higher interest rates.
Well, I'm going to hit you with this one, John. We haven't talked about this in a while, but the dollar's had a pretty nice run today. It was up almost back up towards 103, started to ease back just a little bit. You could see the market start to pull back up a little bit. So we're seeing a little bit of jostling around. We were getting sold off pretty good. We were down triple digits in both the Dow and the NASDAQ, and we were getting pulled down, of course, on the S&P, but we've had a nice recovery, and I think some of that has to do with the fact that the dollar has eased back a little bit from getting closer and closer to that 103 level.
Absolutely. That, the strong dollar, it's going to affect crude oil and energy prices dramatically. So we'll keep our eye on that. All right. You know what time it is now, folks?
Fantastic
future. That's
Fantastic.
right. The CME did that one for us specifically.
Yeah. Thank you, guys. Thanks, Terry.
Thank you. Thanks, Terry Duffy. So fantastic futures today, Pete. Nat gas.
Fantastic future.
All right.
We're going to charge you extra for that, Terry. Nat gas is up 7.5%. That's the futures. It traded right at or maybe just a skosh below $2 per million BTU last week. Resistance is up at about 219, and then the next stopping spot might be 232. But it looks like we're doing that stair step higher now, Pete.
Yeah, John, and I will add this one to you. What you were just talking about before on the macro side of things, the CME at 65% that we will in May raise rates by 0.25%. So I think it's important. Obviously, they have this out there, this metric, and because of that, the CME is on top of it as always. And I'll tell you what, I don't think they've really been wrong yet, John, especially when it's 65% or higher. I think that they've been very, very consistently correct on what the Fed's going to do.
So that's a pretty strong indication that the Fed's going to move, but also further down the line, futures that are out there, forward contracts, if you will, that are out there are predicting much lower rates than what the Fed is saying. Yeah. All right, let's talk about memory chip production cuts, Pete. Samsung made a move saying that they're going to cut production, I guess, to try to boost up prices, Pete. And it's certainly boosting up share prices among a bunch of semiconductor stocks today. They're seeing 3%, 5% or more, depending on how exposed to DRAM in particular, that dynamic random access memory.
And John, when we looked at some of those numbers from Samsung, absolutely atrocious. I mean, really, really bad. They talked about sales of down 19%, and some of the profits are going to be down significantly. So when you look across you can understand why you're seeing some of the benefits of that going towards Micron. Western Digital's another one. Matter of fact, Morgan Stanley had a note out talking about they actually prefer WDC over Micron here. But Goldman has moved Micron up by another $5 as far as the price target, up towards 70. So one thing I think that's been overlooked by a lot of people, John, and I talked about this earlier today on a radio broadcast we were doing. How about the SMH itself this year? Going into this year, a lot of folks were pretty bearish on it, right? They're saying, well, these guys, they've got this issue and that issue. Well, it's up 23, 24, 25% year to date. Not such a bad run. A lot of that helped out, of course, by NVIDIA. It's up 85% so far year to date, but it's the entire group. All you got to do is pull up any of them. Look at Micron, look at WDC, look at a lot of these various chip stocks. They have been off to the races. So very interesting. And I think it's obviously looking very bullish for the U.S. specifically, a lot of these different semiconductors.
Well, how about, speaking of bullish, Pete, PXD, which is Pioneer. This one, of course, is a natural resources play, and in particular, a lot of exposure to shale. So ExxonMobil apparently was in talks. This is not a secret, but they were in talks with PXD and trying to find a price that they'll do a deal. I think natural gas is probably the reason that Pioneer hasn't performed better this year, Pete, because the nat gas side of their business is down, whereas crude oil was more or less treading water, and now with the recent OPEC move is a lot higher.
Yeah, and to your point, John, I mean, they have underperformed a lot of the various peers out there because of exactly what you just pointed out about the natural gas side of it. I will say this, their last earnings, though, you want to talk about beating the living tar out of what the estimates were, or year over year. 591 was what they put up for their earnings in the last quarter. Year before that was 458. So it gives you a little bit of an idea. These numbers are huge, and they've done an amazing job, PXD, and they're probably on the cheaper side of things right now. So if you are Exxon and you're taking a look at something that's going to be a big ticket, John, we're talking $55 billion or more, something in that category. It's going to be a big number, but it could be a lot bigger if you just looked at where some of the high levels have been for PXD over time. So I think that they see the Permian as an unbelievable area, and it's something that they want to have a piece of, and this is a good way to do it. They might not be done just doing Pioneer either, John.
Right. Well, that chances are that other people are going to be making moves on some other properties for fear that maybe they'll be aced out if they don't. So we'll talk about the other properties in a coming episode. How about Tupperware? Oh my God, Pete. This one, it's down huge today, and it's a single digit stock anyway, but it was down from over $2 to under $1.50. It's been $36 a share over the last 18 months. That was the high, but man, it's just been slaughtered, come all the way down to here. Substantial doubt about their ability to continue as an ongoing concern is the part that jumped out at me. What jumped out at you?
Well, you just hit it when you said an ongoing concern. John, a year ago, it was about $1 billion market cap, and today it's about 64 million. I mean, you want to talk about getting the shit kicked out of you. Excuse my language, but holy crap. I mean, that much these guys have suffered and how rapidly this moved to the downside. The spiral is spinning right now. You look at the debt to cash, that doesn't look too good. You look at the free cash flow burn, that doesn't look too good. So there's a lot of issues at stake here, John. Will they survive? They probably will figure out a way, but this is not looking good, and the stock is down, what, 40% today? It could go down even a little bit further tomorrow. I'm not too excited. I would not be going to try to buy this falling knife, but it's interesting to see just how bad things are.
Yeah, it's interesting and sad at the same time. I mean, you know, the amount of shares, it's got 44 million shares. So it can't suffer too many more drops like this, Pete,
Right.
because in fact, just if they sat there and lost 62 cents a share. That's, rough numbers, $20 million in market cap every year that they're hemorrhaging right now just from that. I think this one, they need a partner and they need somebody to sort of rearrange the chairs, the deck chairs on the Titanic.
True that.
Let's talk about Scott's Miracle Grow, SMG. We're seeing a lot of the marijuana stocks, cannabis stocks, many of them doing well, and virtually all of them use Scott's Miracle Grow. Now, people that aren't as familiar with cannabis stocks as you and I, Pete, are thinking, wow, I thought that was for my garden. Yeah, it is. But it's also for a lot of these guys in the cannabis space. And the company says that the net leverage that they have to use to grow their company has been cut, which is a good thing. They're not using extreme leverage anymore. They're using basically net leverage is going to be about a 6 instead of 7 and 8 that it had been in the prior years. So apparently the CEO is getting his arms around some of the spending that has hurt them in the past, Pete.
Yeah, and I think that's exactly the direction I was going to go with, Jon, is that the cost structure, they've done a great job, as opposed to Tupperware, where we were just talking about how difficult it's been for them. You look over at SMG, and this is a company that's actually figured a lot of things out, how to do things far more efficiently. That's why the stock is doing what it's been doing this year and had an unbelievable run already this year, and could potentially even have another leg to that run if they can get things turned around, Jon, with the cannabis side of things. Cannabis stocks, all of these companies definitely need this, obviously, this product or whatever that they've got. But it's a matter of making sure that they're making money with it, because they haven't as much of late. They've had a little bit of a hiccup there. Outside of that, though, when you talk about cost execution, they've done an outstanding job, and that's why they're getting rewarded. That's why the stock has performed as well as it has this year.
Well, let's switch gears over to sports, Pete, because you were lucky to go down and see your Gophers Thursday, but different story, unfortunately, on Saturday. Tell us a little bit about NCAA hockey and the Frozen Four.
Well, it's great when the Frozen Four comes to a place that's 85 to 88 degrees, Jon. We're walking around in shorts and tank tops, and we're walking inside of Amalie Arena. It was phenomenal. I was there, Jon. I'll tell you what, it seats 19,000. It wasn't sold out, but it was pretty daggone close. Were they loud? Yes. The Minnesota fans absolutely traveled really, really well, understandably. Get the hell out of there. Come down here for a little bit of warm weather. Yes. And they were, you know what? They had a great game against Boston University. They outplayed them. You know, Minnesota was the number one team coming into this, and they showed it. They looked fantastic. And then the next game, I think all the money out there, Jon, the game that followed up the Gopher game was with Michigan. Everybody was like, well, Michigan. And understandably, everything I'd seen, they split with Minnesota for the most part most of the year. They were number 3, but they're going up against Quinnipiac, which was number 2. Now, Quinnipiac, if nobody's ever heard of them, they're up there in Connecticut. I used to live not too far south of there. It's an unbelievable program that this coach, Jon, has built up there. They went from, I think, D3 all the way up to D1. He's done an amazing job over many, many years of being there. And they've been there many times, but they just haven't been able to close it out, kind of like the Gophers the last 20 years. But he actually did, because on Saturday night, they outplayed the Gophers. The third period, they absolutely dominated the game. They deserved to win. But I'll tell you, Jon, if you didn't get a chance to see it, it was outstanding, because at the very end of the game, towards the end of the game, 3 or 4 minutes to go, they had gotten things back. You know, they were down 2-1, and they decide, you know what? We got a penalty anyway. We're going to pull the goalie. We're going to pull 6 against 4, and it worked. Just before, as the Gophers were coming out of the penalty box, it gave them the opportunity. The goalie sitting back there, they were just all over it, just making shot after shot. They got one in. They put it to overtime. 10 seconds into overtime, Jon, Quinnipiac got it. And the Golden Gophers had to walk away. It was a sad ending for the Gophers, but I will tell you this, and I wanted to ask you about this. hockey is starting to get a lot more people watching it. This was actually televised on ESPN, and ESPN has done more and more with, NHL along with college hockey. I almost wonder, and I haven't seen it yet, but I wonder if they were competitive with what the college basketball Final Four was, because they had their worst ratings ever, John, for a Final Four because all the big boys were gone. I don't know. Do you think the hockey actually could have maybe at least matched them?
Boy, that would be a real shocker, Pete. And if that's the case, that means it doesn't bode well for NCAA basketball. It bodes well for hockey, if that's the case. I suspect that they did not beat or even come that close to beating them. But we'll see tomorrow. I haven't seen the ratings yet today, Pete, but I'm sure we'll see them by tomorrow. And if those numbers do reflect what you just said, that would be scary for men's basketball.
Well, and I think in fairness to men's basketball, John, when all the Goliaths were gone and the Davids were left, except for UConn, people's brackets were broken. They got a lot less interested into it. And I think that was the big reason why they actually dropped to the worst Final Four ratings they've ever had. But I'll tell you, hockey, especially in person, it is so much different. It's great on TV as well, but I'll tell you what, in person, it was phenomenal. And it was great to be able to walk out afterwards back into 85 degrees. So it'll be, by the way, it's going to Las Vegas in 2025. I think you and I ought to do a show or two from out there. Maybe we could even write it off if we did that. Wouldn't be a bad idea.
Wouldn't be a bad idea.
All
well,
right.
Then we had the Masters. So what's your focus here?
Well, Jon Rahm, John, I think it's worthwhile to say that this guy's got ice in his veins. So here's what I've got for you. The guy comes in on his opening round, day one, Thursday. He 4-putts the very first hole. I mean, he's absolutely, that's going to break your psyche, right? Well, it didn't break his psyche at all. As a matter of fact, he bounced back, and he actually finished with 72 holes. He finished minus 12, but he came back and he made up for those shots that he had lost and absolutely had an incredible first round, despite the fact that he 4-putted the very first hole. So here's my question for you. Jon Rahm now goes through. He absolutely just continues to play along. Guys are falling back. The LIV guys, the live golfers are all kind of doing their thing. Rahm and these guys are doing their thing. There wasn't any disputes. Everybody was playing, golf and having a great time. These guys have been friends forever. Let's be honest. But it was pretty exciting to watch. And here's the curious thing I've got for you. This Rahm kind of has the same sort of elements to him like Tiger. He looks nothing like Tiger. I don't mean that. But gosh, he's got ice in his veins, John. He doesn't allow things to really get after him too much. And it's fun to watch. And then you look over at Tiger, and it's another time where he has to walk away. Now, he's qualified 23 times at the Masters to be in there. But even though he was able to do it this year, he made the cut, he had to walk away for an injury. So my question is this. Does Tiger Woods have any chance of ever winning again? He's won once since 2008, and that was the 2019 Masters. Other than that, John, that's it. Is this guy done?
I wouldn't think so, Pete. But it does depend, and certainly the weather did not favor him.
Right.
Because here's a guy with a lot of operations under his belt, from the back to the leg that, was injured so severely in that accident. Mm-hmm. And, all of a sudden it's cold and rainy, and I'm sure that I'm the only one of the two of us that's ever played in cold and rainy golf course. And it sucks. It sucks. And if you had injuries, in particular bone and, repaired ligaments and all that kind of stuff, that he had plantar fasciitis as well, Pete. So, there's just so much pain. And the fact that it's cold and wet, I'm sure he just wanted the hell out of there.
Yeah. The thing that's interesting, John, is everybody thought, oh, this is the one guy. He can break Jack Nicklaus with the 18, champion majors or whatever, and he's got 15. The problem is he's only won once since 2008, and that's going back to this Masters. So you kind of look at Tiger as a guy who was absolutely lock, stock, and barrel. It was a done deal. He was going to shatter the record. And man, the poor guy, for some reasons, he chose, obviously poorly, but others just injuries and everything else. And I think a little bit of it has to do even with his swing, John. If you think about it, everybody said when he first got on the tour, they said, man, he has so much torque because he spins so far back when he's going to come in at the ball when he's driving. And everybody sort of said, at some point that's going to be bad for him. It's not going to be good. And it was really sort of sad to hear people talking about that. And then to see the reality of it, that he's just starting to break apart, it seems like, as time goes on. And he's had a lot of injuries. And I just don't know if he's ever going to get another major.
Might not, Pete. I mean, again, you look at those old guys that were the honorary starters, like Jack Nicklaus or Gary Player. I watched both of them hit. Gary looked a lot better. Jack didn't look so good. I mean, that guy's back is shot. You can just tell by how stiff he is when he walks over there and all. And he was another huge hitter before the equipment got a lot better. So in order to make those 300+ yard drives, he's getting that serious torque into his body over and over and over again, practice as well as the matches. So, yeah, who knows? It could be over for him. I would think that he still has gas in the tank, but, I bet he picks far fewer events to compete in.
Yeah, 47 years old is where he is. So, but he's like a football player, John. He's 47, but his body probably feels 57 at this point, maybe more.
Yeah. Well, thanks for joining us today, folks. You've been listening to The Rebel Edge with Pete Najarian, Jon Najarian, and our master of we don't have a teleprompter, but the master of the graphics and the fantastic futures, Jared Winkleman.
Fantastic future.
That's 3 today, Terry. You owe us for 3.
Great job, Jared.
All right. Thanks for joining us, folks. I'll be over with Liz Clayman at 3 p.m. today. I'll see you guys tomorrow with Pete right here on The Rebel's Edge.